Right, welcome to our support tutorial. Right, on here we're going to talk through support lines. What basically they are, each of these black little bars represent 1 day of price movement. So what happens is it starts going up and then it comes back down. If you see the first blue circle, the reason why we've circled that particular bar is the price came down slightly, it hit a certain point, the bottom of that bar, and then it went back up for a couple of days. So because that was the lowest point of that little move, that can be significant, so we take note of that. At the moment we can't really, we could draw a horizontal green line across to see if that provides some support, but we'll go into that a bit later. Right, so the second blue circle, the reason why we circled that again is that was the lowest point of that little down move. We know it's the lowest point because afterwards it went upwards. You can't circle anything until it hits a low point and bounces upwards. Then you can say, right, that is the low, because otherwise the next day might go lower. Now we've got two of them circled points. We can actually draw a green line to connect both of them. And then if you extend that green line down the screen like I have, because you've got to imagine you're going to be doing this on a chart, you watch what happens. If the share price comes down as it does and touches that green line again, watch very closely, because what could and maybe even should happen is it should kiss that green line, and a lot of buyers should actually buy at that point, causing the price to go upwards. In this example, that's exactly what happens. So now we've had 3 touches of that line, we know that is a valid support line. And so what we can do from that is the next time that anything even comes near or touches that green line, we can buy it again. Circles 4 and 5 touch the green line again. Because it's a support, it shouldn't actually, the price, them black bars should not go below the green line. In this example they don't. There's enough buying pressure just above the line and the price goes upwards. So let's look into this a bit deeper. Right, let's dig a little bit deeper. Just pause this for one moment and just take in all the information on the screen. Right, welcome back. We have a support line up the top. Same sort of concept as before. We mark the lows of the down move. The low must be followed by a bounce for it to count as a support. So we've got one support line identified. The blue box and the blue circle signifies, it sort of highlights where a support line didn't hold. And if you notice how much of a drop ensued afterwards, that's because a lot of sellers, a lot of people that are holding shares that understand how support lines work, they would have sold, and not a lot of people would have bought until it's showing some sort of signs of support. So we come back down to the second support line near the base of your screen. What happens here is that we find a low point, the blue circle, it bounces, so we know that is a potential support. We can draw a line across, a horizontal line as we've done, and it's really important to see what happens the next time that line is touched. And actually it touches, the price touches that line and it bounces, so we know that is a potential support. It might not hold, so we need to see what happens the third time it touches. The third time is quite significant because it takes, we'll go into this later, but it takes 2 points of contact to draw a line and a third touch to confirm it. After the third touch we get quite a good rally, and then basically it hits an area where it doesn't go any higher. So if you was to buy, if you were looking at that point, you see that that last black bar, if you was looking at this for the first time and you wanted to buy shares in this company, where are you likely to buy? Where would you think would be a good point to buy, knowing where the support levels are? Well, the obvious answer basically is that green line. You're not guaranteed to get another touch of that, because if buyers do come in and the share price wants to go higher and higher, you may not get another touch, but that is a good area basically to buy again. And that's why supports are so important, because they show you where the risk versus reward favours you buying the shares. Right, so let's look into why support lines actually provide support. Again, pause the screen and take the information in. So we found on the left hand side a low point, so we can draw a horizontal line across. Now the next time it touches that, it might just go straight through it, we don't know, but if it touches that green line and then rallies upwards, we know that's a potential support. So in this scenario, there'll be a lot of traders watching to see if the price will move back down to that green line. If it does, you'll probably get a lot of buy-in, and basically, as we're about to go into, if there's a lot more buy-in than there is selling of shares, prices will go up. So that's why the support line works that way, because people know it's there, people wait, and when the price comes, or if the price comes down to that level, they buy. And people don't necessarily sell. I mean, people do still sell, but traders, any good trader will not sell just above a support line for no reason. So that's why they provide support. So again, we've just mentioned this, touched upon it. This is what happens to cause share price movements. If you get more buying than selling, basically there's not an infinite supply of shares. If someone's trying to buy, then there needs to be someone the other end of that transaction selling. If you get more buyers than sellers, then what basically happens is the price goes up to encourage people to sell. So there's always a buyer and there's always a seller. There is a bit of a misconception that when a share drops on the day, there was more sellers than buyers, but that's not necessarily true. It's just lack of buyers. People stop buying. So what happens? Because you can always sell shares. So if something's £1 a share and there's loads of people trying to sell and there's no one buying at £1 a share, then they need to let people sell. So what will happen is they will move the price down, make the shares cheaper to attract buyers. So eventually you will get a point where buyers match sellers, and then the share price will stop falling. It's all to do with supply and demand, but more on this another time. So just to reiterate, not only is a support line brilliant for people that want to buy, because of that reason it discourages sellers. So when you get a price just above a support line, you probably won't get that many sellers because they know the price is likely to rise. So that's another reason why support lines work the way they do. That's why it's such a good area. If you can buy on a support line, then it's a brilliant time to make an entry into buying that company shares, because not a lot of people are going to be selling at that level and a lot of people are going to be buying, so you should get quite a good rise. So again, obviously pause this screen, there's a lot of information on it. Right, so there's a lot of information on this. Basically it reiterates what we've said. It takes 3 touches of a line to confirm it. So really you should know that if you've got a line that's had 2 touches, it's a higher risk buy on the 3rd touch than if there was 4 touches. So it's still a buy, but you need to be careful, because if it doesn't hold that line, then you need to maybe think about selling and thinking, okay, perhaps that wasn't support after all. So if you're an aggressive trader, that's fine. A lot of people probably make good money out of that, but we prefer to trade lines that we know are actually there. So yeah, there's quite a lot of information on this, but you can learn a lot from it. Okay, so we've not actually drawn a line on here. This is an uptrend. Pause your screen and just have a little go at where you can connect the lows. Remember, you need to find the lowest point of a little pullback down move, and if that point is followed by a rally the next day, then join up the next time that happens, and you should be able to find a line on here. Have a go and pause your screen. Okay, so hopefully you got something that looked like that. It's connecting the lows, and we know it's a low because it bounced the next day. It went higher, it didn't go any lower. So this is easy stuff. It takes a little bit of practice sometimes, because sometimes what happens is the price goes a little bit below your line that you've drawn, but then it'll go up. So there's a little bit of practice, but just throw the cat amongst the pigeons. Let's have a look at something else. Okay, so hopefully you got something that looked like that. It's connecting the lows, and we know it's a low because it bounced the next day. It went higher. It didn't go any lower. So this is easy stuff. It takes a little bit of practice sometimes, because sometimes what happens is the price goes a little bit below your line that you've drawn, but then it'll go up. So there's a little bit of practice, but just throw the cat amongst the pigeons. Let's have a look at something else.